Are you employing someone in your business? Let's check out what the implications are today. Hi, I'm Kimberly Chapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Do you employ somebody in your property business? Well, if you do, you may just need to be aware of how the changes with employment allowance, employers' national insurance and the taxes all fit together. So today we're going to dive into an example to just show you how it fits together with the employment allowance, the national insurance you'll pay, and the changes in the thresholds, so you can understand what the cost to your business is going to be. Obviously, we need to make sure we don't forget about the other costs because we've got a salary to pay for them, we've got pension contributions to pay for them, as well as making sure we've got that employees' insurance, and also we've covered any of the employment law requirements for things like flexible working, sick pay, maternity pay, all of those different things that we have to deal with when we employ somebody. Let's have a look at the numbers today from the national insurance point of view, so at least that side of things you've got an understanding of how it fits together. We're going to take a dive into employing your first person, and then also when we've got a couple of people within the business to see how the two different aspects change and have an impact. Let's dive into the numbers. As of the October 2024 budget, it has changed things for our payroll side of things, and they have changed some of the numbers that we now need to be aware of. So today we're just going to have a look at how those adjustments are working through. So the key figures that we need to be aware of now are some very payroll specific numbers. And the first is that we have now got an employment allowance of 10,500. Now, another key number we also need to know about is that our employer's national insurance has also gone up. So this is now gone up to 15%. You might think, oh, I don't pay this, it's not relevant. Well, stay with me and we'll go through when it may become relevant and where you just need to be aware of a few things. Now, the other number that was also changed in our recent budget was our secondary threshold, which you may think, what the hell is a secondary threshold? Well, let's have a look at how this is going to be affecting us as well in our calculations. There are two further numbers that we just need to highlight before we get into a few calculations and a few things of how it all fits together, which is our personal tax threshold, which hopefully you may recognise as 12,570, and our lower earnings threshold, which again is probably something that you've never heard of but is relatively important, which has gone to 6,500. In previous years, our secondary threshold was 9,100 and our lower earnings threshold was 6,396. So these are all our key important numbers and information which we are now going to utilise to have a look at what the impact is for our directors who earn money out of their companies. Now, to start us off, we're going to just have a look at a single director company, which is probably the one that is going to be most affected by these changes. So we've kind of got a couple of different salary options. So let's have a look at our salary options. So our salary options are, we can earn a salary of 5,000. We'll go into our reasons why in a moment. We could have a salary of 6,500, and again, we'll go into our reasons for that in a minute. Or we could have a salary of at 12,570. So as you can probably see, we've got three numbers there, which one is our secondary threshold, one is our lower earnings level, and one is our personal tax threshold. And there are different reasons why you may want to do any one of these going forward. Now, if you are wanting to take money out of your company, not pay any national insurance, then the $5,000 is going to be the one, which works out at a monthly figure of £416.67 per month. However, the key impact here is there will be no national insurance payable. However, you will also not get your national insurance stamp, which contributes to your state pension entitlement. So there are some implications if you do not earn the next salary up. And the next salary we're looking at is if you went for something like £6,500, which on a monthly basis works out at £541.67 per month. But on this, we have got employers' national insurance of £225 to pay per annum. Now, a few things we just need to be aware of is this is going to help save us some corporation tax, because the employer's national insurance is allowable for corporation tax. So the additional corporation tax saving that we will get will be £42.75 per annum, which means the actual extra cost to us is actually going to be £182.25 per annum. So in essence, the cost to the company will actually be £6,682.25. So let's move that over to our $12,570 to see what the impact with our employer's national insurance is. So on a monthly basis here, we will be getting £1,047.50. Our employer's national insurance on this will be £1,135.50, which you'll have to be paying each month when this payroll's done. Now, there will be some corporation tax savings, which is £215.75 per annum. So our extra cost to the company is going to be £919.76. So our total additional cost to the company is going to be our $12,570 and our $919. So our overall extra cost is $13,076 per annum. Now, you may say, but wait a minute, what's this employment allowance? Aren't I entitled to it? Now, we are talking about single director companies at present, or single director companies / payrolls. I should probably be more specific. And the reason that we've had to calculate employees' national insurance at this point is because a single director payroll will not be entitled to the employment allowance. To be entitled to the employment allowance, there are specific criteria. One is that you're registered as an employer, which we're making the assumption at this point that you are going to be registered as an employee. You need to be a business or charity with employees, which, based on what we're looking at today, you are going to be an employer in business. Now, one thing they did in the budget was they removed the requirement for the national insurance liabilities that would be payable. So that means you can get the employment allowance whatever size business you are now. However, for companies with just working directors and no employees, there are these specific exclusions. And the exclusion is that as a single director company, you are not entitled for the employment allowance. This ultimately means that you will be paying employers' national insurance now on the basis that that limit has reduced from $9,100 down to $5,000. Now, the next question we probably want to go to in a second is, what if there's more than one director? And we'll jump onto that in a moment. if you are entitled to the employment allowance, this is claimed through your payroll each month, which in effect means you won't actually pay any employee's national insurance. And generally, you'll put it through your payroll. And when you put it through your payroll, unless HMRC disagree with something, it will be allowed as part of the payroll. Now, the next section we want to look at is, what if there is a two-director company, and how does that differ to our one-director company? So with our two-director company, we are going to have our director salary, and we're going to have director 1, and we are going to have director 2. So we're just going to use our 12,570 because we want to maximise on our personal allowance for each of the directors, and we also want to make sure we're claiming the national insurance stamp, and we are making sure that we're maximising what we can take out the company tax efficiently. Now, the NI payable on this would therefore be £2,271. But the benefit of having two directors which are entitled to the employment allowance is that our employment allowance at present is £10,500, which means what we in effect do is each month we'll claim the employment allowance, so the employer's NI payable will be 0. So for any two director payrolls, we are not going to actually be affected, and we're still going to be able to be paying things. Now, this kind of leads me to the question of, well, what if I am a one director company? What are some of the options available? Well, one of the options available is take on a second person, whether that be a second director or whether that be an employee. So let's just have a look at our example of a company with a director and some employees to see how this fits together when we are looking at an employee at the lowest possible income, and then when we have employees who are on slightly higher salaries and how it fits with the employment allowance. So let's move on to our next example of our company with a director and employees. So our first part that we are going to look at is going to be our director and our employee. Our director, we are going to put on a director's salary to maximise their personal allowance. And for the employee, we are just going to go over the primary threshold. And the primary threshold in effect equates to £416 and £75 per month that you would be paying an employee to hit that threshold. Now, the employer's NI that would be payable here at the new 15% rate is going to be £1,135 and 65 pence. But because we now do not have a single director company and we've got an employee on there, we are now entitled to the employment allowance, which means that we can take that off because it's under 10,000, and we now have no employer's NI to pay. So it comes out at nil. So let's just have a look at if we have other employees that are looking at a higher figure. So now I'm going to just throw it to the other end of the extreme, and we're going to have a couple of employees. I know for many a property company that these salaries are probably far too high than what you're expecting, but maybe not completely, because you may have lettings managers or something like that. So they are on higher salaries, which hopefully means you are not in the business every day. This equates to a monthly salary of £3,333 per month, just to give you an idea of what that is. And in this occasion, our employer's national insurance is going to be at £11,635.50. So as you can see, much greater than we've had in any of our other examples. Now, our employment allowance is great, and it does allow us to reduce our employer's national insurance. However, the limit is 10,500, which therefore means that we can only take off 10,500, and this company will still have £1,135 employer's national insurance to pay, which also means that there will be some additional corporation tax savings because we are paying more costs, which are coming in at £215.75. So overall, the additional tax that we're paying on this will be £919.76 per annum. Now, the additional element is actually only the difference between our 15% and our 13.8%. So on that basis, this $919 is what you would pay now. You will have had to pay something potentially before, but all our rates were lower and our threshold before you started paying national insurance was higher. So this is going to be an additional element that potentially you are now paying. For anyone whose profits are going to be at the higher rate, we've currently taken the corporation tax saving at 19%, but that would increase to 25% for any companies that are earning greater profits. For a single direct company, there is maybe some significant changes and some considerations to be made to see what salary may be the most appropriate. There needs to be probably consideration of what you're taking out, why you're taking it out. For example, is it to get your NI stamp, as well as is it to be tax efficient? Do you have enough income in the company to be putting a second person as a employee of the company? Have you got a wife or children or adult children who are actually contributing to the business but aren't getting rewarded at this point in time? And it may be a reason for putting them onto the payroll to reward them for the work that they are doing. As a family business, a lot of the time this work is gone unpaid for, but it may be the time where you're considering putting them on the books so that they are being rewarded for that time that they are working for you. As you can see, there are a few things to be aware of with how the national insurance is working and how it may impact what salary you are taking out of your company. So I definitely suggest you speak to your accountant to make sure you understand the impact of what these changes into the 25-26 tax year are going to be doing for you and your property company. As you can see, there's a few different things we need to be aware of. And hopefully this gives you an idea of how it fits together so you can have a look at your numbers to see how it's going to impact you and your business. Obviously, you just need to have a look at how the numbers fit together to see whether employing someone is the right move for you, and make sure you know what the costs of employing somebody are so that you can not find that you're getting any surprises with any of the additional taxes that may become payable. Hopefully today you've discovered exactly the impact of employing someone in your business will be. What will the cost be and what considerations do you need to make? If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.